Hello guys, Steven Dux here. Welcome to this video. So today I want to talk about the current market conditions that I experienced this year, and I found out there's a little bit difficulties, especially on tracking data. So for today, I want to share my experience and let me know how you think. And before we get into this video, make sure to click the like button and subscribe. And let's get into it. So today I want to focus on the opportunity that we have in 2022 compared to 2021, especially on the consistency of unstable data trend. So back in 2021, especially on bound short and gap up short, we had in total of 120 to 150 massive amount of opportunity, but most of the opportunity came in later the year. We still haven't gotten into the later year in 2022 yet. During the summer, market typically slow, but in this year, we pretty much had 2 to 3 really good plays like amtd, amdo, GME, AMC, and bbby. 3 of them are meme stocks and 2 of them are sympathy plays, and one is energy, one is IPO. So those are the 5 opportunities that we have that you can make really good money on. But in terms of bound short and the gap up short plays, there's not many of them that gapped over 70%. For all the tickers that went over 70%, either they are IPOs or micro flow. So in terms of strict criteria, it's hard to trade on those either low volume on the IPOs with massive amount of spread, or with the micro flow that's after reverse split, the flow goes down to 300K to 500K. It's pretty much impossible to trade as well. In 2022, what I noticed is sometimes you get a massive amount of volume, like bbby, you get 400 million volume a day and the 300 million volume the next day. And then this week, we're trading 1 million shares in one day, and SHPH or HKD and all those tickers are trading really low volume, and the spread is really big and can't really size in that much on that really low amount of volume. There is, I would say, not very consistent amount of volume that's being placed into the market. In 2021, we have consistently volume increasing. You can kind of predict the trend. Let's say today the stock traded maybe $400 million on the current day, and then tomorrow maybe trade anywhere between 470, 500 million. It's doable trading that type of volume amount, and it's quite I would say easy to be able to manage that type of volume, because it's not fluctuating back and forth. It's only increased maybe less than 10% or maximum 20%. But in 2022, what we have is some days we trade 400 million volume in one day, and some days we trade 1 million shares in one day. So there is a, I would say, drastic difference between current market volume. It's not uptrending, it's not downtrending, it's just jumping everywhere. Because when people see opportunities, they hop in, and pretty much most of the time there's zero liquidities out there compared to 2021. In terms of data tracking, it's really difficult because it's hard to predict what's the next, I would say, dollar amount will be traded in one ticker, especially on gap up short or bound short or any type of pattern that you're currently trading, because the volume, it just jumps either 10 times in the next day and it drops 10 times in the next day. So from what I noticed, and I kind of want to make, I would say, a solution about this problem that we run into, especially the liquidity issues. I think what you should do, or what I do, is you split into 2 sections. That one section that you track all the mass liquidities when the market comes back, use that data, especially just for mass liquidity or mass amount of volume tickers. And one section that you track is all the low volumes together, like HKD, SHPH, and to see if there's any type of correlations. And seasonally, let's say we have one HKD, and after you trapped a lot of short sellers on the upside on really low volume, then we get into a bigger amount of volume in the next play. So you want to track them, I would say, in a timeline to see after how many of those low amount of volume plays, then we get a bigger play. So in this way, it makes it a little bit more predictable to adapt in the current market conditions. Is because that if you keep expecting that the next play is going to be very similar to the ticker that trades 300 million volume one day, then it's not going to work, because we're in a completely different market condition now. So that would be my suggestions of adapting into the current market. And if you have any questions, any comment, please leave a comment below and tell me what you think. So that'll be the end of this video. Thank you very much for watching. I will see you guys in the next one.